Hey, what is up, everyone? Today I'm going to talk about the market implications of these tariffs. Now, right now, we are going through the belly of the beast as it comes to the market sell off and what these tariffs are doing. So, first and foremost, be sure to give this a like, give it a share, click the link in the description. All your support means a lot. Now, currently, the U.S. has a tremendous deficit, and you guys can look at this on the U.S. debt clock, but essentially, what's happening is we are going through a period in which we need to find ways to pay off the government debt. And now I get it. If Kamala would have been elected or some other, liberal elite, they could have kept kicking the can down the road. But there would have come a point in the next 5 to 10 years where we had to face reality. Now, these tariffs, what they're going to do is they're going to generate more money for the United States, right? Because now companies will have to, when they import, they're going to have to pay a duty, whether that's 10% or 25%. And so this is actually good long term because we just can't be taken advantage of on every single country with all these tariffs. A lot of these countries, they charge us value-added taxes, and we don't charge them anything, right? And so there's something called a balance of trade or a balance of payment. And essentially, we're at a deficit. We're actually losing on a lot of these. And this is not good for the long run. Furthermore, it doesn't help because we're so deeply into debt. We spend so much. And yes, we should be reducing our spending. That's what Doge is doing. But the next thing we should be doing is we should find ways to increase our revenue or have, at least at a minimum, a net even balance of trade. A net even. What's wrong with that? Why do we need to have a negative balance of trade with all these countries? Why does that make any sense? So the thing is this, we need to get over our selfishness with our dollar amounts and our assets, and we need to say, hey, what's best for this country long term? What is the best thing to do? How can we strengthen our middle class, strengthen the poor? How can we make things better for everyone, not just a few people that have stocks and assets, right? So essentially, we need to bite the bullet now. We need to go through the hard times now. And in the medium and long run, I think it'll do us really well. So the baseline tariffs that we have right now is about 10% for all the countries. And I think this is good. I think it's good no matter which country you are. We have a baseline tariff. And this is good. This will cause increased income, at least from the standpoint of countries that we trade with and that import here, right? It'll also encourage more domestic manufacturing. But the bigger thing is the reciprocal tariffs. This is China, the EU, Japan. All these countries, they have large VATs or value-added taxes on us or tariffs on us. Why don't we have at least 50% of those tariffs on them, right? What's wrong with that? So, but here's my thing. And here's where I don't agree with the tariffs. That is, if we're going to increase tariffs and get a lot more tariff revenue, a lot of the citizens like you and me, we're going to be paying increased costs. So if we set up the external revenue service, why don't we start to eliminate or get rid of the internal revenue service, right? Think about it. I don't want to pay more money on goods and products and then also keep the tax rates that we currently have. So that's kind of what I'm thinking of right now is like, that's not fair, right? How is that fair that you're keeping the high rates there and you're not So I'm just trying to think like, if we start tariffing, that's fine. That's fine by me. I don't care. And I'm sure many of you guys don't, but at least cut out the IRS. Get rid of the IRS or at least reduce it significantly, 90 to 95%. So like many of you guys, I bet, the Liberation Day has liberated me out of a lot of money. And I think, the best thing to do is not necessarily, don't look at the market every day. Try to keep your head high, focus on your skills, your earning ability, what you can do, right? I think a lot of people are realizing that they made some mistakes in the market and a lot of things are overvalued. So, I think long term, I'm very bullish. Medium term, I'm very bullish. Short term, I'm pretty bearish. But I do think things will reverse over the coming weeks as people come to the table and they negotiate in a constructive manner. I think the sell-offs should slow down in the next week or so. I think it's painful, very painful right now, but I think we need to stay strong, stay confident, and keep with our long-term strategies, right? Don't just panic because everyone else is panicking. Make structured portfolio allocations based on decisions that you've made in sober thought, not in panic. I think the tariffs are going to shift the world order, and I think now is the best time for Trump to make the moves if he makes moves. Now is literally the best time. Because if he wants to get elected midterms, he can't have the market crashing and free fall. So this is the time to make the moves. This is the time that gives him runway to correct anything as needed. And it will be painful. It's not going to be easy, but it's going to be something that needs to be done. So the Smoot-Hawley tariffs, these are this actually occurred in 1930, and this actually caused a lot of our trade to collapse. It actually worsened the Depression in 1930, and it did cause political fallout. So those tariffs weren't too good, and it actually did, I think, deepen and worsen the Depression of 1930. The McKinley tariffs, on the other hand, it did cause the industrial output to rise, but the consumers paid higher prices and the Republicans lost in the coming years. So these are two examples of tariffs in the past. And, I don't think history has shown very kindly to tariffs. I think they do work, but it causes a lot of unanticipated pain in other areas, right? So looking at history, I'm not too optimistic on the outcome of these necessarily. But if they do have tariffs and they do all this tariffing across these countries, I would like to see the IRS go away completely. Now, here's the thing. Prices are going to increase, all right? We know that. This could lengthen and steepen a depression if we see increased prices. And this is not going to be politically popular unless a lot of deals come in the coming months and the market recovers by midterms. I just can't see this being a popular move. I really can't. I think Jerome Powell will be forced to cut rates. I think companies may go out of business if this occurs. Margins are going to get impacted. A lot of companies' earnings per share, it's going to get squeezed really, really tight. There's not going to be a lot of net income growth and profitability if margins are squeezed on these international supply chains. So the market implications are not good. But what can we do as individuals? Well, I think it's good. Buy stuff that's made in America. Grow your own products. Try to find ways to position yourself so you're not as impacted. Now, a lot of the stock market has already crashed now, and I actually think it was funny. I was seeing Google trade down, and I was seeing other tech stocks trade down, and I was looking at them like, how does that make any sense that it's trading down? I mean, that's not going to get impacted by tariffs. But I think it's just the pin that pricked the bubble overall. This is the pin that pricked the bubble. And people now are kind of in a mode where they're like, oh, okay, this is not good. Let's take some risk off the table. Let's move into treasuries and cash so that we can weather a storm if needed. I think now is a rough time to sell. I do. I think if you sell like right now, I mean, yeah, it could go we could see the market crash another 50%, 30%, 20%, but we're already down 20 to 30% from all-time highs, right? So how much lower can we go? I don't know. We'll have to see. But the market implications for these tariffs will be negative. And I think we're going to start to see more sell-offs ensue in the coming weeks. I think we'll start to see it level off as things return to normal. I can't see Trump, as big of an ego as he has, I cannot see him letting this continue to crash perpetually. I can see them stepping in with the money printer. I can see them stepping in with the plunge protection team. I can see something happening, whether that's rates going down significantly or money printing going on or bailouts happening. I don't know what it is. I don't see it quite yet, but if things worsen, I can see that happening. And guess what's going to happen? More QE. We'll have to see how it unfolds, but overall, stay go outside, touch grass, play sports. Don't just keep your head focused on the computer screen, even if it's scary. Because in the end, we play our cards as we do. We play your cards the best you can, but don't get caught up in all this noise. Just try to protect yourself and invest over the long run. What's going to be good over the long run? Because opportunities are starting to rise to the surface, and that's where people make a lot of money. So nevertheless, guys, be sure to like it, share it, click the links in the description below. Any support means a lot, and I really appreciate it. And I'll see you guys in the next one.